What's going on, traders? Welcome to another video. In this one, we are going to talk about an important concept, which is time and range within a candle. If you want to catch expansion candles and know when the candle are going to expand or consolidate. So starting with the introduction, in order for price to print an open low high close or open high low close candle, it must consume time and cover some range. So this is the concept we will be utilizing in this specific video. Now the first component is time within a candle. Time always comes before the price. Each candle is given a specific time window to expand. Whether it's an hourly candle, it is given 60 minutes. Whether it's a daily candle, is given 24 hours, and a 4-hour candle is given 240 minutes to either expand or consolidate. Now the question is, how do we know whether the candle is going to expand or consolidate? So that's when the price signature comes in play. We will talk about this in the next slide. Now, range within a candle. Within the specific time, the candle has to print that range to create the body or wick of the candle. Like for example, an hourly candle, within the 60-minute, it has to create its range, whether it's printing wicks or bodies, it is expanding or consolidating. Now in this schematic, you can see on the left side, we have range. On the trading view, it will be on the right side. And on the downside, we have time. So for an order to an hourly or daily or whatever candle to expand, it has to consume time. So in this example, we have taken the 1-hour candle and we are looking at that on the lower time frames. For the 1-hour candle, the time frame alignment is a 5-minute time frame. When the candle is opening up, it is printing at wick first. So you can see it is consuming time. It is consuming time in minutes and also covering range to the downside. Then we had a change in state of delivery signature, and the candle is having a small wick. So the candle consumed time to create that wick, and now it has time left to expand and print that body. So how do we know that the candle will expand? Like, it has to make that opposing run in the early minutes of the candle, and it has to create a small wick. To then there will be a time left for expansion or printing its body. Now, time and price relationship, you have heard ICT always says time first and price later. The market expands within specific times, like the kill zones, news releases, equity opens, like New York Stock Exchange open 9:30. Now here is the daily candle, and this is the hourly chart. We are assessing how the kill zones are affecting the candle's range. So the Asia session, it consumes a lot of time, but didn't create that expansion on the wick. So the candle consolidated. Then we had a London protraction. London expanded to the downside, consumed some time, and then expanded back inside. So this is the reversal signature, V-shaped recovery, a change in state of delivery. And now in the New York session, we have a news release and equity release. So the price will expand higher. So this is how the daily range is printing: consolidation, then a small wick, expansion downwards, followed by expansion upwards, a change in state of delivery. Now in the New York session, the protection phase already occurred. Now the candle has to expand. So when we have a protected low of the day or a London reversal, the New York will continue expanding. So we had a 8:30 expansion and 9:30 expansion, printing the body of the candle, and this is why New York has the most of the candle range, because of the equity and the news releases. Now, how to trade expansion? So if a candle is going to expand, it often creates a small wick, which means the candle has spent less time creating that wick, and now it has more time to expand or create that body. So the small wick is actually signaling an expansion within a candle. Now, in order to create the wick, the candle has also have to like consume less time. Like for example, for an hourly candle, it has to create the wick or the opposing run within the first half quadrant or the first 15 minutes of the candle, and so there will be more time for the candle to expand or print its body. Now when a candle is not going to expand, so there are some signatures. First one is it takes too much time to create that opposing run. It will be consolidating and failing to close above or below that opposing run. And when there isn't any point of interest met, like when a price is consolidating and there is no point of interest, then the candle will stay sideways. And in the consolidation phase, the price is actually building and engineering liquidity. This is the Example, this is a reversal candle. The candle opened up, more time consumed to form the wick, less time to expand. So on a reversal days, when we are saying that the candle will expand towards the opening price, it will print a small body. So it means the candle opened up, created a large wick, consumed more time within the wick, and now the candle has a small time window to expand. And now how is the expansion candle printing? It is consuming less time to form that wick, open low, small wick, and it has now a larger window of time to expand higher. Now how to engage within the candles? You have to wait for the swing point formation. You have to wait for the opposing run within a candle. Preferably it will be in the first quadrant or the first 30 minutes of the hourly candle, and in the first session of daily candle and for the New York expansion. And how do we know when the candle is not going to expand? It will create an opposing run, but without engaging any point of interest like SMT divergence, point of interest, fair value gap, etc. Now we will go over some example explaining each of the concept we talked about in this PDF. So here we are with our first example, and I will show you how the reversal candle is printing. We have failure swings and sell side objectives on the left side. So in order for the candle to print an open low high close, it has to take this failure swing and then expand higher. And these boxes are representing the sessions, the Asia consolidation, London also consolidation, not of big moves. Now going into the New York, we have news. Now from the opening price, the candle has expanded lower to print its wick and taking these sell side liquidities, these sell side objectives. Now in order for the candle to print its body, it will be a small body because from the opening price, the candle has created a large wick, which is the signature of the reversal candle. More time spent in creating the wick, less time to expand, and now you will see that. And as you can see at the end of the day, candle expanded to those opening price and this objective right here, large wick, more time spent in the protraction phase and forming that wick, less time to expand and print that body. We have a small body and a large wick. So this is how the reversal candle is printing. It consumes half of the day to print the wick and then less time to expand higher. Now for the expansion candle example, we are on the hourly chart of the NQ. The Asian session is consolidating and we have sell-side objective, failure swings, and this new week opening gap. Now from the daily open, you can see the candle is consuming the first session of the candle to form that wick. So that means the New York session will expand higher. And the Asian session, we had a protraction. London continued their protraction to the downside, taking the sell side liquidity. Now we need a V-shaped recovery, a change in state of delivery. Now we can visibly see we have created a small wick, open low, reversal in the London session, the early time of the candle. Now we have more time in the candle to expand higher. And also we have news release in equity open, which can expand the candle or print its body. So we have a lot of time left in the candle to print its body. Now moving into the New York session, we already have a protective swing, a change in state of delivery, a London reversal. So the New York expanding higher. And this is when an expansion candle is printed. Open, low, high, close, open, less time consumed to print the wick, now more time to expand higher. Now we will go over the lower time frame examples. How can you avoid a price section and how you can know when a reversal or consolidation candle is printing and how to avoid that. Now starting with the first example, we are on NQ daily chart. We have failure swings to the upside, protraction phase, daily open low, printed its wick. So now we can assume that the candle will expand higher. We have taken the previous candle's low. How do we know if this candle is going to expand or consolidate? Now here this is the 7M candle and we have taken its low on the 8M candle. So in order for the candle to expand, it has to create its wick or that opposing run in the first quadrant or the first half hour. Now we will wait for that opposing run to close above. Now the candle is failing to close above the consecutive series of down close candles. So this is the first signature, and we also have the first 30 minutes of the candle covered. We have another stop run. Now we need that opposing run to close above, and yet we have failed to close above that down close candle. This is when you can assume that the candle is consolidating and it is engineering the low resistance liquidity run or liquidity to upside. We have failure swing. This candle doesn't took this candle high. So this is building the failure swing for the next candle to take it slow and then expand higher. And we are already 55 minutes into the candle, so we will wait for the 9 a.m. Now on the 9 a.m. we have a stop run, consecutive series of down close candle. In order for expansion, we need that opposing run to close above, and then we will take entry. And also we need that run in the first half of the candle. If the candle is taking too much time, so that will mean it is consolidating and building more feather swings. Now we are 25 minutes into the candle, and equity is open 9:30, close above the consecutive series of down close candles. And this is our true change in the state of delivery. It took half an hour for the candle to print its wick, and now we have half an hour to expand higher and to these feather swings. So we can enter on the next candle, stop loss below the 50% of the order block, and we can target 2 hours. And now you can see this candle was an expansion candle, open low first and the first half hour, and then it expanded higher because the candle has time to expand. Now for the next example, we are on the silver 1 hour chart. We have a reversal put in SMT divergence with the goal, a closure above the down close candle. So that means this is the New York reversal and we are continuing higher. So we need that lower time frame signatures and then time and range within the candle to confirm our entry and get on side with the expansion candle. So dropping down to the 5 minute. Now the reversal candle has already put in, and now entering within the next candle, we need this small opposing run within the first quadrant of the candle are consuming less time to create the wick, so then it can print a large body. Now the candle is consolidating because it hasn't been a point of interest. We are consolidating between the range high and the range low, and we are already 30 minutes into the candle. So this means that the candle will consolidate. The next candle will take its low and then expand higher. And you can see the 45 minutes are already covered within a candle, and we haven't expanded yet or created the wick. So this means the candle is creating the low resistance liquidity run, and it will take it in order to expand higher. 950, the candle hasn't created its wick yet. Now opening up within the 10 candle, we have taken the previous candle's low and also these feather swings, the low resistance liquidity. And now we need a closure above the down close run in order to expand higher. So this is when the time and range concept comes in play. Candle is having a smaller wick, open low, taking the previous candle low and the feather swings, and it is taking less time to close above the consecutive series of down close candles. It means we have consumed 15 minutes of the candle and we have 45 minutes left to expand or print the body. We can enter at the next candle, stop loss below the body lows, and we can target 2 hour or 3 hour because we have a large time to expand higher. And as you can see in the left over time, the candle expanded higher and printed its body, open low, small wick, high close, taking less time to make that opposing run. For the last example, we are on the NQ 5 minute chart. On the left side we have the NQ and on the right we have the ES, and we have taken the previous candle's high on the 10 a.m. Now how do we know that this is going to be a reversal candle? It will create an opposing run and then close below it, and then we can trade the next candle as an expansion. So waiting for this to happen, and additionally we can use the SMT divergence to confirm the true reversals. Now the candle is consolidating. It has created a large wick within the first minute, and now it is consolidating in between, and we don't have a clear series of up close candle to close below. Now 15 minutes into the candle and we haven't closed below the consecutive series of up close candles yet. So this is a large wick which can be identified as a reversal candle, and we have SMT divergence with the yes on these highs. So now we can trust this candle to be a true reversal, but for that we need a closure below the consecutive series of close candles. Now we have traded into the 11 a.m. and we need that small run and then closure below that candle. But in this case, we haven't closed below the previous series, so we want a closure below this too. Now 15 minutes into the candle, we have closed below the consecutive series of up close candles of the 10 a.m. reversal candle, and also you can see on the right side with the indicator, we have created a small wick into this fair value gap and now closing below that. So I can enter on the next candle, my stop loss above the body highs and targeting these feather swings. So this is how you can differentiate between the reversal and consolidating candle. So we had a consolidation, a large run, which is a signature of the reversal candle. Then we failure to close below that within the 10 a.m. candle. On the 11 a.m. candle, we create a small wick and close below the previous change in the state of delivery. Now that confirms this is a protected swing, and this is stepping into the fair value gap. This is also can be used as a protected swing. We enter on the next candle, and that candle expanded downwards because having a small wick, taking less time to create the wick and having more time to expand lower. This is it for this video. Hope you have learned something. Make sure to subscribe to the channel and like the video, and see you in the next one.